Good morning, traders. This is a live trade recap. I took 4 trades this morning right at the market open. We're going to go over all of them right now. I have them all on video. I did end up with a 25% win rate, so 3 of them failed and 1 of them hit the profit target. But there was quite a few things that I noticed that were pretty interesting that may affect the way I trade this plan next week, and I'm going to go over all of that stuff with you in this video. So as always, I start with my screener. Right now I'm strictly trading mid-cap stocks because they are supposed to be more reliable with patterns, and that's what we're testing right now. Are they? When I say more reliable, I mean as compared to small cap or low float stocks. So this is my mid-cap screener. Whenever you use the Webull customized screener, don't forget to hit modify, and otherwise your filters will not be applied. And then I organize it by volume. And I actually lowered the price to $50, the max price, because there was very few stocks that I was seeing above that price range. So I figured, and then it's just, you're not putting as much money out there if you do get into a high dollar stock. So anyway, the price range right now is $5 to $50. And then organizing by volume, I look at the stocks, obviously, that are going up in price, so I can ignore all of the red stocks. And right at the open, I'm looking for 500,000 shares or more, and obviously if they're trading with 500,000 shares at 931, 932, they're going to be in the millions, a few minutes later. So you'll see the stocks that made it on my watch list and in the video right here. So we're looking at SPCE. That one was going up a lot in the pre-market, and there was plenty of volume in it at the open, but it never broke out through the previous day's high, so there was no trades there. TIGR popped right up at the open, broke out through its previous high. There was 2 trades on TIGR, and then LAZR, same thing, 2 trades there once it broke out through its previous high. PSFE is very interesting stock because it was one of the highest traded stocks on the screener. You can see it right here. It's number 2, and it's one of the top gainers as well. But I ignored it, which I may change that going into next week. I ignored it because there is no 200 MA because it hasn't been trading for that long. It's an IPO. So let's take a look at that chart really quick, and I'll show you what I'm talking about. So one of my criteria here to look for stocks is that the stock must be trading above the 200 MA. So the fact that I ignored it was just me following my plan. It wasn't really like I was breaking my plan for some weird reason or anything. So you can see here, it just started trading back in October 2020. So it hasn't been trading for 200 days. So therefore it won't have a 200 MA line. And then I can't really judge. I can't judge the long-term trend based on the 200 MA. Obviously, I could just look at the chart and kind of see that, overall it's kind of trading sideways, maybe a slight upward trend here from where it began. So this may be something that I start looking at starting next week is even if a stock doesn't have a 200 MA, if it has the volume and, it's in, say, gapping up or a recent uptrend or something like that, like this is obviously gapping up, then it may be something to look at if it has a lot of volume, because as I said, this thing was trading with a lot of volume relative to the other mid-cap stocks. And once you do that, you can push the price up quite a bit. So anyway, let's go back to the video. And it did give some very nice entries I checked later. And it really would have affected the results of the day. This is only one day, so you can't say like, oh, well, if I would just trade like this every day, my results would automatically be a lot better. Changing your plan based on one day is a very dangerous thing, especially if your plan is already tested, positive or, successful, then you should never change it just based on what happened on one day. But right now, my plan so far, I'm 21 trades in, and we're hovering right around break even. It's slightly red. So, I think it's still in the phase where, making some changes is okay. So let's see here on TIGR, I think might be our first entry. Yeah. So I was waiting for a 1-minute candle to make a new high after a pullback, right? Because we've broken out through the previous highs. That's my first requirement to look for a trade. And then second, I need to see a pullback. And then I enter for the break of a 1-minute candle, the first 1-minute candle to make a new high. So it happens on the candle that's coming up, because there we go. Yeah, so 28.29 was the break of both of these candles. So as soon as that next candle popped up and hit 28.30, I triggered my hotkeys to get in. I'll just go back to show you that in real time. So show you how quickly that happens. There's 28.30. There's me triggering my hotkeys. I'm in the trade. And I got filled at pretty much the ideal price, because as soon as I saw that candle, it was at 28.30. I hit my hotkeys to get in. I got filled at 28.30. So definitely good execution there. And my first step almost always is to move my stop up to the appropriate level, just in case the stock starts to flush down immediately. That can definitely happen. You don't want to take any bigger loss than you need to. So here is my 2R calculator, which you could download from the Facebook trading group by the same name. It's a very handy tool, and you just plug in your entry and your stop loss, and it gives you an automatic profit target of 2 times your risk. So that's what I'm doing right now, is moving the target to my moving the target order to my profit target. And then here it flushes me down. So that's the importance of moving your stop to the appropriate level right away, because otherwise you would take a bigger hit. So if I focused on just, let me just get the profit target in place, I may have gotten stopped out at a much lower level. So it really didn't go that low on this one, but it's just an example of what could happen. You'll see on LAZR there's quite a few big flushes at a couple of points, and we'll take a look at those too. So on LAZR, I'm waiting for a pullback. Now, even though the TIGR trade failed, my plan and my strategy says that I still need to look for the next entry, because this is still a strong setup. Point A of the ABCD pattern is somewhere way down here, so obviously that hasn't been broken. So the fact that I got stopped out is just a sign that maybe I got in a little bit early. So now we are just waiting to take the next entry. And I'm looking for the entry on LAZR, which is just about to happen here. I think, yeah, there's where I've never actually seen this pop up. That's interesting. So obviously I had triggered my hotkeys because this 1 minute candle broke out above the previous one, and my stop loss goes to the low of the candle that's previous to the one I entered on. And again, using the 2R calculator to come up with my profit target, move that into place, and that trade is all done. And then you could see, let's go back to where I triggered my hotkeys for TIGR. It immediately popped up on that candle and triggered my entry. So I got in 28.14, and then moved my stop loss down. And I was kind of like in the middle of working this order when it got triggered, and didn't want to miss the entry. And it was a good thing I didn't, because this is the trade that worked out. So I just went ahead and placed that order as soon as I saw it get triggered, and then I finished up, moving my profit target on LAZR. Now I had time to work on the TIGR trade. So just moving my target to the appropriate level. Once these stop losses and targets are placed, I never ever move them unless there was some type of a mistake or something. If I check them later, realize, oh, my stop loss is not in the right place, or miscalculated or something like that, then I might move them. But once I've done everything properly, they never ever get moved, no matter what, because there's no point in judging the trade once you're in it. You've taken the trade because you've seen your setup, and your setup is what it is because you think it has a higher probability of working out. So you're in a good trade as far as you know, so why not just trade your plan and let the trade work out? So Macy's popped up on the screener, and I mean, it probably popped up a lot sooner, and obviously I was busy with these trades, and it actually had a nice little 2R play right here. If I would have gotten in for the break of this candle, I think I would have gotten my target hit over here and never stopped out. That would have been a nice easy trade. Not a big mover. I think it would have been like a 20 cent per share trade. I mean, that's still decent. So, yeah, I mean, that's going to happen sometimes. There's no way you're going to catch every opportunity. And the only way that you could trade like this is kind of like a first come, first serve basis. As you see the stocks pop up on the screener, you take, the best ones, the ones with the most volume, the ones that are gaining the most, and you look at those, and that's the best you could do. but sometimes you're going to miss out opportunities, and other times the trades you do take are going to fail, and that's just the way it is. That's why you're looking for results over a long period of time. After 100 trades or so, is the plan profitable with all of those factors involved? And that's what I'm doing right now. This is why I'm just trading with one share. And this way, if this plan doesn't work, if it isn't profitable in the long run, I have not risked and have not lost a lot of money. If you're a fairly new trader, I mean, like within a year of trading or about a year of trading, you probably shouldn't be doing any more than one share. Definitely no more than 5 or 10% of your account size on every trade, because you're not really proven profitable in the long run yet. I've had green streaks where I've been profitable, and then later, kind of gave everything back, trading the same thing, like not doing crazy stuff or taking stupid trades or anything like that. I mean, sticking to the plan that made me a bunch of money, continuing to trade that plan, and then as the market changes, the plan becomes unprofitable. So that's what I mean by, this kind of long-term trading. The first step is proving it with 100 trades. Once you've gotten 100 trades down and you're profitable, then there is a chance in the long run that the trading system may be profitable. So that PSFE, sorry to go off on that rant, but I think it's important stuff. PSFE really was an interesting stock here because, like I said, that didn't have a 200 MA. It hasn't been trading that long, so I did ignore it. But there was a really nice little entry right here because it was trading above its previous high, which was 1245. It just broke out above it and gave this little pullback on this red candle. I could have gotten in for the break of that candle and then made an easy 2-hour trade. I would have hit my target over here. And I think I would have been green on the day because of that, because I think that was triggered at 9:37. And let's see what time I triggered these trades at. So this is 9:36 right here, and that was my second trade that worked. All right, so that was a winner. And then let me see, I'm just waiting for, let me just scroll forward here a little bit. So there's 9:37. So that's when I would have been triggered on that PFSE or whatever that ticker symbol was trade. Maybe 9:38 at the latest. Let's scroll ahead. So here's 9:38. So I haven't been triggered to take that next LAZR trade. So at that point, I probably would have, I still may have taken that LAZR trade, but I would have still been, that would have been like a 2 out of 5 win rate, which would be a 40% win rate, and that would have been a profitable day. So it's interesting to see, how one little thing could kind of change everything, so to speak. That would have been the end of my trading as well for the day, because once that PSFE ticker symbol hit my 2-hour target, I wouldn't have placed any more trades. So that one would have hit the target, and the second TIGR trade would have hit the target, and obviously the LAZR trade, both of those failed. So either at the worst case scenario would have been a 40% win rate and would have been a profitable day. So the point I'm getting at is that going into next week, I'll probably start taking a look at these stocks that pop up with a lot of volume, even if they don't have a 200 MA line, if they haven't been trading for 200 days. But if they're trading with lots of volume and they are increasing in price, then I'll put them on the watch list. And if they break out through their previous high, I'll take an entry. So that's pretty much it for the trades. Let's just, actually, no, I didn't show you the TIGR hitting the target, I don't think. So let's see. Oh, this is pretty interesting. Let's go back here for a second. So when this thing got stopped out, look at what happened there. The huge flush. Obviously, everyone had their stops there, and I mean that's why you use stops, because who would want to get stuck in that flush? And I actually got filled only 2 cents lower than where my stop was. So even in that flush, the execution was really good. So just wanted to point that out, and why it's better to have a stop loss in place, because what happens if that flush goes down and continues? That does happen. This one, luckily popped right back up. And then this is where my next entry got triggered for LAZR. That was just the first trade on LAZR. So here's the second entry. Got triggered, but it popped up so hard, so fast that I didn't want to take the entry there. I wanted to let it come back down to that 2487 area. And since this trade didn't finish, it didn't hit my 2-hour target, I have to take this trade according to my plan. So there's 2487. You see me trigger my hotkeys, and I get in and again move my stop loss to the appropriate level, come up with a profit target, all of that, and then the trade is taken care of. And then of course, like maybe 30 seconds later, my TIGR trade hit, which if that would have hit a little bit before, I would have never gotten into this trade, because that is the way my plan works. If I make a 2-hour trade, then I stop taking trades because I don't want to give back any profits or turn a break-even day into a red day, which this, had I just stopped there and this trade not get triggered, then there would have been a break-even day. So, but that's just the way things work out sometimes. And the main thing is that no matter what your plan or your strategy is, that you follow it 100%, because otherwise you're not going to know if it's working or not. So that's what I was doing today, is following everything 100% to the T, so that I know my results are a reflection of my plan. So that's it. I mean, the TIGR trade hit my 2-hour target, and then LAZR, since the trade is already in place, I just have to let it play out. And here's me just taking the time to move my stop up on my SPXL swing trade. Actually, I moved it down because I moved it up preemptively yesterday. So I moved it to the appropriate level. That was where I thought the 50 MA was going to be. I was just a few cents off. And that's it. So then the LAZR trade gets stopped out, and then we're all done for the day. Because once I have a 2-hour target trade or 3 losses in a row, then I stop trading, whichever one comes first. So that's it. And then we'll take a look at the spreadsheet. There is some pretty interesting data forming on this spreadsheet. And this is why you need to collect data, because otherwise you're not going to know what's going on. You can see right now that the average of these days, which I don't think is the best way to judge your win rate, but it's just an interesting data point. The average of all of these is 29.17. The average of the actual trades is a little bit lower, 28.57. We need to see 33 to be break even, so we're a little bit below that number right now after 21 trades. But if I exclude all of the trades that were taken in error, that doesn't mean the red trades. That's like these trades that are highlighted, or not highlighted, but outlined in blue, and that trade that's highlighted or outlined in red, another one that's outlined in blue. So when I remove those trades, then this is the win rate, which is profitable. And those trades are outlined because either I made them in error or I've changed something in my plan after the fact because I noticed, okay, that's not really a good setup. So that's what's going on there. So this is technically still profitable right now. The plan itself is still profitable. So anyway, the other thing that's really interesting is if I calculate the win rate after 3 trades only, I'm also profitable. Actually, that's the highest win rate, 37.5%. And that's including all of the trades. That's including the error trades and everything. So if I just do the first 3 trades and I leave out all of the remaining trades, that's where my win rate is. So, and you could see that after my 3rd trade that all the trades are red. So that's why that's working out that way. And the other interesting thing I'm sure you've noticed already is that the first trade is always red. So my first entry is based on, when I used to trade the low floats and small cap stocks, and those things can be a little bit more aggressive, meaning that the very first pullback you get, sometimes that's all you get and they take off. And that's why I have that in my plan, is to take the very first 1-minute candle that makes a new high after some sort of pullback, some sort of lower high, even if it's just one candle. And so far that's yielding a 0% win rate. And then usually on the same stock, or maybe, see, this is the thing that's kind of tricky. You really have to scrutinize your data very carefully, because if you look at trade 1 is FUBO, trade 2 is SPCE. So it's not like that's the second trade on that stock, and there may actually be, here's the second trade on that stock, which is green. So that's the second entry. So there it holds true. And then RAVN we should ignore, because that one was a bad trade after the fact, I realized. FUBO, there's the first entry. It was red. Did I take another entry that day? No. So that's not really a useful data point. MARA, did I take another entry? Yes, the second entry also failed. And then BBBY, I think there was 2 entries on, oh no, there was only 1 entry on that one. But then if you look at SKLZ, here's the first entry which failed, and then the second entry was green. TIGR today obviously failed, but the second entry also failed on that. Oh no, that one was the one that worked out. So second entry worked, and LAZR, both of those entries failed. So, you know, there could be something there. It's still a bit early to tell. I really don't want to change anything at this point because we're just too early into this test. But that is something that I will be looking at in the future. If the first trade continues to fail and the second trade at least has like a 50% chance of working out, then obviously my first entry I'm taking too early. So that's something I can look at and say I could just make a simple rule like wait for the second 1 minute candle to make a new high. Obviously I could miss some runners doing that, but those are the things that you've got to look at. So anyway, I went into a lot of detail in this video. Hopefully it was helpful for you. And the main message that I'm trying to get across with this test trading is that not only do you not have to risk a lot of money when you're a newer trader, you should not be risking a lot of money when you're a newer trader, because I've been doing this over a year now, and look how difficult it is for me to come up with a plan based on just technicals that is profitable, you know, and I'm executing it pretty well. If I executed it perfectly, it is slightly profitable, but still, it's not like it's, you know, 40-50% win rate. It's still just above break even. So hopefully the message is coming across loud and clear. All of this test trading so far, after 21 trades, has only cost me $1.58. So that's nothing. How many trades have you taken this month? And or let's say since the beginning of my plan, and how red are you? You know, that's what you need to ask yourself, and why. You know, is it because you're trading a proven system of something that you've proven at least over 100 trades and it's normally profitable, and now you're red? Then that's okay. But if it's something that's completely unproven, that you've only taken a few trades doing and you're in the red, then you know you ask yourself why. And why are you trading more than one share when you haven't tested it out? So that's the main thing I'm trying to get across here, is you don't need to take big risks if you're new. And all along, I'm making money during this test trading by swinging SPXL. You can see that my account has just continuously grown in the last month. So let's see, is this, yeah, the beginning of the month, 12/17. Here we are at 12/40. That could drop, of course, because SPXL is at all-time highs right now, and it's going to pull back, but that trade is going to be a winner no matter what, because look where it is right here. The 50 MA is at 99.22. My entry is at 99.26. This thing goes up at least 20 cents every day, the 50 MA. So obviously on Monday it'll be in the green, and then after that it's just going to be kind of a sky's the limit thing. Depends on how long this trend lasts. If it comes right back down in a couple of days, it's still going to be a green trade. It'll just be a smaller green trade. So you can test trade, you can put a very small amount of capital at risk and still be making money in the background if you figure out a system where you're trading something safer, like an S&P 500 ETF, something like that. So anyway, lots of information there. Hopefully it was helpful. If it was, hit the like button. If you have any questions, comment in the comment section down below. I'll get back to you. As always, go into every single trade with a plan. Stick to your plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.